Hi, everyone. I would like to spend some time together with us discussing about the topic integrated reporting. This time it has gained significant relevance around the globe, and probably that is the reason why it started, getting its own acceptance and visibility in the Indian subcontinent perspective as well. And that is where the people who are responsible for reporting of the financial statements, people like us, accountants, or preparers of the financial statement, they need to understand that reporting is not just about the financial parameters or the financial performance, while that happens to be a primary requirement of reporting. That's the reason why probably we prepare a set of a balance sheet, a statement of profit or loss, statement of cash flows, statement of changes in equity, and the disclosures, which is notes to accounts. But then it's also to talk about a more comprehensive picture of the business as a whole, right? How does it impact the society? How does it impact the people who are working, within the organization? What are the researches initiatives? What are the new developments that the entity or the businesses is looking at, has been actively conducting? Those is something which is broadly the perspective of integrated reporting. Now, it is certainly to be appreciated that the financial performance is indeed the primary requirement. So we would see, right, the instances where you look at the financial reporting or the financial capital as a terminology coming in place. But then there are more aspects that we would be seeing, where in terms of how does an entity look at, or how an entity is expected to look at the overall framework. And when we say it is expected, of course, integrated reporting is not mandatory. Okay. An organization is, as of now, at the moment, is not compelled to prepare its set of information or its set of reporting on the integrated reporting, something referred to as an IR framework. Okay. It is more focused on. So if I were to just say, mention this in a broader perspective, it is more focused on several forms of capitals. Let me use a mnemonic, and then we can, of course, understand that better. We call it M and fish, right? Where it took up, M would refer to manufactured capital, N would refer to natural capital. I'll just be spending a little time explaining these, individual aspects. F, of course, refers to the financial capital. I would refer to intellectual capital. S refers to social and relationship capital. And then H, of course, would refer to the human capital. Okay. Now, what are we trying to say? That when you are preparing your sets of financial statements, the users of the financial statements, the stakeholders involved, they would be interested in understanding not just the performance for a year, right? If I were to look at the statement of profit or loss, which is indeed the statement for a particular period, let's say 1 year, but they are also interested in understanding from a sustainability and strategic perspective. What is your long-term vision? How are you looking at your own, acceptability in the society for the users at large? How are you looking at building your own value, with the help of helping your organizations grow with the people that you are working with, which could be your employees, which could be your suppliers, which could be your customers, which could be governments, which could be society? How are you looking at building more innovations? How are you innovative as a business? And please bear it in mind, it is not just that an organization which is into, let's say, technology is only required to be innovating. An organization which is into pharmaceutical may only be doing researches and developments, right? even an organization which is into manufacturing, wherein they are trying to achieve better ways of doing the manufacturing, better ways of doing the processing of the work, or let's say, in a more efficient way, how can they operate? That is where all these intellectual capital would come into the picture, right? How are you working towards ensuring that you are addressing, or you are working with a larger set of people, right? You're not just confined to few key, let's say, customers or suppliers, wherein there's a risk to the business at large that in case something goes wrong, there's not too much of a concentration of business sitting or dependent on few people, right? So look at building a larger perspective of the social and relationship capital perspective, right? At the same time, the IR framework also focuses on the physical capabilities, the physical capital perspective, the number of units, number of locations, number of the physical assets that you possess, and how are they increasing, from time to time, is something which is also being addressed. Of course, where some entities, for example, in automobile sector, where in aviation sector, you expect them to be more environmental friendly. So that's the reason where, or that's a place where the natural capital also has its own relevance and significance. But let's appreciate the fact that even other organizations, right, a service industry would be now talking about the carbon emissions, for example. A manufacturing company would be looking at the reusable material, and you look at, of course, renewable sources of energies, etc. So they're all being discussed as a part of, let's say, integrated reporting. Now, interestingly and importantly, this is not a theoretical concept. Okay, so this is not a theoretical concept. Is not a theoretical concept, wherein we say that when you align the intellectuals, social, human, natural, manufactured, and of course the financial. When you look at financials, of course, we are talking about how has been your return on investment, what has been your growth in your earnings per share, and different financial parameters, right? You need to assess that these all aspects are interconnected, interrelated, and should not be looked in isolation. And at the same time, there is some quantifiable value or quantifiable amount that can be attached to each of these parameters. Of course, it's easy to do it for the financial capital perspective. As we said, that use of ratios like ROI, or let's say, earnings per share, etc., could be a parameter. But at the same time, how many number of patents, for example, that you would have designed or that you would have got approved? What are your research capabilities that could be addressed under the intellectual capital perspective, right? From a human perspective, you might want to kind of also talk about the number of employees that you're working with. What has been the growth in those people? What kind of skill development have you done? Let's say in terms of the number of certification provided. That could be a human capital perspective. On the natural side, you can certainly quantify in terms of what has been your reduction, let's say in case of carbon emissions, and many organizations around the world, including EY, right? So we're all looking at as organizations in terms of making a quantifiable or a measurable criteria of achieving these so-called as KPIs, or the key performance indicators, as we want to refer to. Okay, on the social front, we might want to talk about a lot of e-commerce businesses. Let's say, to talk a name, for example, let's say if I talk about an Amazon or a Flipkart for that matter, or a Grofers as a name, we are referring to how many suppliers and how many customers are we interacting with, and that gives that broadens the base, and that gives a larger perspective to the users of the financial statement, that yes, the organization is looking at a value creation, not just from the financial perspective, not just from the returns perspective, but also on a sustainability perspective, also on a strategic long-term basis. Okay, so when I really bring all these perspective together, the integrated reporting becomes, the principle or the expected way the entities are required to report. Okay, as we highlighted that this is not mandatory. So of course, organizations may not be burdened, may not be required to prepare their sets of financial statements along with the integrated reporting framework. But then, interestingly and importantly, many large organizations, right, be it, let's say, Tata Steel, or you would have HDFC Bank, or you would have JSW Energy, you would have, let's say, Maruti, for example, and many such companies, many such organizations, right? Thomas Cook India, right? So they're all preparing these, their reports, with using the integrated reporting framework as well. And we will be discussing one of those entities' financial statements in terms of how beautifully are they able to represent the idea, right? Now, that would be also important to understand. There is no defined format. There is no defined format for such reporting framework. The companies are provided a flexibility. And again, as we said, that it's a principle-based framework, right? There's no specific format, but yes, the companies are given freedom to be, using their set of information, to be using their sets of, let's say, the KPIs, to be able to prepare and measure these, different capitals from the numbers that they wish to reflect. Of course, we need to be careful about that. You're not giving an information which is prone to error. You're not giving an information which is immaterial. You are trying to give a consistent and a clear information as it all aligns with the work that you do. I mean, the bigger objective or the larger picture that this standard or this particular framework attempts to offer is to bring a comprehensive view of the organization, so that the users of those financial statements can take a long-term view in terms of how does the organization look at itself on a sustainability and a strategic front. All right. So when I look at this particular standard, my standard would want me to consider, right, what is the authority, for example, that has issued the framework for integrated reporting, right? Of course, we may call it a burden sometimes, that why should a company again prepare more information? Is it a duplication of work? That could be one important question. So who's that authority which is issuing these framework? Okay. And then while we briefly try to address the purpose and the objective of IR, that is integrated reporting, we want to understand it more in detail by using the underlying, or by looking at the underlying principles of that. Okay. And finally, understanding and analyzing, is it really a great tool? Is it really serving the purpose which probably the world is talking about today? Okay, that is what we want to understand, whether IR is a better reporting tool by looking at those guiding principles and the content elements reflected or available within the IR framework. Now, essentially and interestingly, the questions have not been tested on this topic in the past examination, but then we can always expect something around this topic. It could be a small topic, but the way we start looking at the relevance of these principles around the world, probably the ICAI may be interested in looking at it, at least in a short questions perspective. So we should be a little more open to understand those things. And of course, we don't intend to miss that question in case the question is examined in the paper with us. All right. Now, essentially, we briefly talked about that. And I would probably want you to remember this, MN-FISH, which is basically your manufacturing, natural, financial, intellectual, social, and relationship, and human capital concepts. And that is what is basically the idea of the forms of capital as a part of this discussion. But this section would also talk about the introduction of integrated reporting in terms of why it originated, where from it originated, what are the key aspects or features, and of course, those forms of capital as well. Okay. Now, this is where a brief history is shared. In 2010, the IIRC, International Integrated Reporting Council, which is basically an authority wherein you have different stakeholders from different parts of the world, right? Regulators, investors, companies, standard setters, professionals, non-government organizations. They came together where they talked about the need to have something called as an integrated framework. I mean, let's appreciate that primarily people look at a balance sheet or a statement of profit or loss, a statement of cash flows or a statement of equity, etc., to take a financial decision, to take an investment decision. But then, are they not concerned about what is the viability of the business, right? At what pace and in what direction is the business heading towards? Are we looking at a business which is a threat to the society, although it is highly profitable? Or can we assign more weightage to some businesses wherein they may not be making a huge amount of money, they may not be making a lot of returns, but they are sustainable in themselves. They are trying to serve the society at large. Okay, let's not be confused with the fact that businesses are required to make a profit. But then, is profit the only thing that they should be looking at? Again, you would recollect, as we always, as we have studied about these aspects of wealth maximization versus profit maximization. So to some extent, the IR framework attempts to consider the wealth maximization concept, so which aligns with the mission of a business, with the overall objective of the business itself, right? I mean, you can imagine today in this world, the businesses are actually talking about automation. You're trying to build flying cars. You're looking at probably finding a possibility to live in Mars, right? So you're looking at all these things. Why does a company need to do that? Why do organizations need to spend billions of dollars or crores and crores of rupees on those monies, right? On such kind of so-called as hypothetical ideas. And well, it could be hypothetical in today's world, by the way, but the whole point lies in that you as a world, you as an organization may not have a sustainability. You may not have a very very long term horizon if you don't look beyond what you can see, right? And that is where you need to look at it. Are you just working for your shareholders, or are you working for the people, the society, the nature that you're a part of, or and other aspects as well? So there is all integration of those aspects coming in together. There's an integration of all those aspects coming in together, and that is the reason why IR became an important parameter. Okay, and that's where the step two comes in. The idea is purely to communicate how are you doing a value creation. Okay, not just about profit making and financial performances, but largely about the value creation by an organization. Okay, the whole thought process, it might sound a bit theoretical, but it gives a greater flexibility to the entity in the management, but also to consider what is the value creation generation done by organization through various forms of capital. Again, you would remember MN Fish, right? We want to kind of remember that from this perspective. Okay, now if you look at it, the need, of course, you start talking about, it creates a better articulation of the range of measures, right? We'll see in some time how does, for example, an entity like Tata Steel is doing that. We'll see those numbers in front of us in a while. Okay, so the idea of IR is to create or better articulate the broader range of measures that contribute to the long-term value, not just 1 year, not just 2 years, 3 years, 5 years, looking at considerably long term. Okay, not just for the shareholders, but how does that organization work towards the society? Okay, of course, the idea is to improve the quality of information, where you as an organization are expected to suggest, expected to communicate. How are you making use of your available resources, available capital, and how are you creating more forms of capitals? Financial, natural, right? Manufacture, intellectual, social, and relationships, and of course, you're looking at the final one, which is, so we had human, of course. You look at all these parameters per se. Okay. Now, of course, when you look at that parameter, it's a more cohesive and efficient approach, because what you're trying to build here is that these capitals in one way or the other would make your businesses, you know improve. It would make your businesses appear working better, right? How much value proposition, how much of the training, investment, for example, that you're doing with your employees or for your employees, how much is your coordination with your suppliers, how well are you connected with your customers, right? This is all about your social and human aspects. All right. So one way or the other, it comes back to you in form of some tangible benefits, right? What are your investments made? What is your capability on newer and innovative techniques, right? What is your, let's say, number of patents or the copyrights, etc., as applicable to your business, if at all applicable to your business, that would come into the picture. So that also gives a lot more confidence to the users or the stakeholders to to invest more in your business or have a trust in you know the business as far as the performance is concerned. So you start looking at all those parameters, and let's appreciate the fact, in 2020, for example, the entire world got affected by COVID. But then, of course, the businesses suffered. Many of the businesses suffered considerably. And that is where these kind of integrated reporting frameworks became even more relevant. The shareholders and the stakeholders, the governments for that matter, they would certainly want to support organizations who are able to create a very positive role for the society. And somewhere this integrated reporting framework helps the society, helps those stakeholders, helps the governments to decide whether the entities is genuinely concerned and contributing towards the all formats of the stakeholders, right? Or about human aspect, the nature aspect, the financial aspect, of course, that is always there. So you look at a balanced approach, and that is where this reporting has a bigger role to play. So when you say you're looking at a cohesive and efficient approach, as far as the corporate reporting is concerned, it talks about different reporting strands and communicates the full range of factors that materially affect the ability of the organization to create the value over time. Okay. It goes without saying the quality of the information is improved. There's a better understanding of the different aspects. We'll see, of course, in some time, and how they coordinate, or how they depend on each other as far as the value creation is concerned. I mean, you can safely imagine a pharmaceutical company doing continuous research. For me, in my statement of profit or loss, if the company is not doing research, in a short term it can create or it can showcase a lot of profits, but where would it go after a while if it's not doing a research? You cannot have a short term view in that case. You have to have more clarities on that aspect. Okay. Similarly, a company which is probably creating or generating more pollutants, it is not an environmental friendly process. Okay. They may not do that because probably that is not required to be done from the legislative framework. But then the governments or the shareholders in general may not approve such practices, no matter they are making profit by not controlling these pollutants. So you start looking at it that there are interdependencies from these different types of capitals, and accordingly you start talking about that. Large organizations, another example I can quote, wherein they are making tremendous profits, hugely or highly valued businesses, but they are not treating their employees well. Believe me, it becomes an open statement, right? And people are, critical of the fact that, well, profit is important, but you cannot keep your employees unhappy to earn that profit. You need to give them, for example, a skill set. You need to give them safe working conditions. You need to give them comfort so that they can work better. You look at all these parameters as a part of this discussion. Eventually this would support decision making, integrated thinking, eventually to bring a value proposition. The idea is all about value creation from the business perspective. All right. Now, if I look at it, of course, these could be more, to align with the ideas of what eventually is the way that integrated reporting would work. But the key takeaway is it's a principle based approach. There is no specific format. There is no specified format for reporting, right? So you can simply, as a business, can decide how do you want to create that integrated reporting structure while preparing your sets of financial statements. Now, broadly, the idea is to have those uh, companies with an objective of profit making, but then it does not stop there. Okay, it does not stop there, which means that even public sector and not for profit organizations may also be looking at, and they would be able to adapt and apply these integrated reporting frameworks. So it becomes a more comparable situation or a position for both categories of the businesses, right? Third one is, of course, identifiable communication, which would be either, of course, in Indian context, we don't expect it to be a compliance or a mandatory requirement. Okay. But then you can use that information. There's an existing compliance requirement where you're reporting your, CSR spendings, where you're reporting your, research expenses and other aspects, for example. So you can use that information so that it does not appear to be a duplicate or let's say an overlapping information. So you can utilize that information from the financial reporting to eventually create this linkage with the integrated reporting framework, numbers, as we intend to do that, right? It could be at a standalone, or it could be a part of another report as well. So you have a choice, for example, to bring it along. As we said before, it is not just about the financial item, but it is also too with the non-financial items. We look at the qualitative aspects, we look at the strategic or sustainability aspects, but essentially you start talking about it, there is a measurable criteria, right? As I was trying to mention, for example, if I say that if there is a service company which has, let's say, 100,000 employees working with itself, right? Maybe a company in IT. Now, how many number of employees are they catering to? Let's say if they're working with those 100,000 employees, what is the skill set that they're able to create? What is that skill set they're able to create? Are they offering them, let's say, a certification where they get trained and they become a better, skilled person so that they can contribute more to the organization? Now, there could be an argument very, very clearly that some of them may leave. Well, that's okay. But end of the day, you are creating some value for the society at large. And this would offer some returns back to yourself. And that is where you start looking at the value creation from that perspective, not just on the financial, but also on the non-financial perspective. Okay. Of course, we have talked about this, something which comes in a very, very clear format. I have M, which is manufactured capital, N, which is natural capital, F, which is financial capital, I, that is intellectual capital, S, which is social and relationship capital, and finally H, which is human capital. The M in fish mnemonic works for us. That's what you want to certainly remember. When you say manufactured capital, it's about the physical objects. How many sites, locations, factories, etc. you're working what is a growth? So it reflects it's a tangibility of the growth, the tangibility of the value creation that you are bringing. Okay. Similarly, when you look at the natural capital, you start talking about how far have you started moving towards use of a renewable source of energy. I mean, imagine as an airlines company, if you are moving towards a solar cap, mean a lot of our business, but then people are doing that because they also understand that the biggest constraint for the business, or the biggest cost that an airlines business has probably is the fuel, and fuel is, of course, non-renewable source. So how much are you moving away from that non-renewable source and moving all the business sector, eventually moving to electric cars. Okay? Now, we don't want to say that electric cars, for example, cause pollution or does not result in a complete efficient structure where you can, of course, save a lot of energy, but still it's a better movement. It's working towards a more cleaner environment for us. That's where the natural capital has a role to play. Okay. So if you look at the financial capital, well, this would be straightforward. You look at different financial ratios where you're actually talking about what is your return, and that is where it aligns with the other return that's at large. Okay, you will actual capital, organizational knowledge-based intangibles. You may want to even understand it from that perspective. What are the number of licenses or the patents, or let's say researches that you have conducted, which is going to be benefiting you as an organization, right? What are the certifications that you're carrying from your business's perspective? They would have a role to play here. All right. On S, which is social and relationship, you're bringing a larger group of stakeholders. You're bringing the employees together. You're bringing the customers. We're talking about, for example, the number of complaints which have been reduced over a period of time, right? The number of suppliers that you are working with, has it increased, which means that there is a lesser dependency on few suppliers. Okay, you see from that perspective, right? And finally, how are you keeping your employees motivated? How are you keeping your vendors happy? How are you keeping your customers happy? You're bringing those competencies, you're increasing the capabilities and experience in all perspective. And that's where this fish, right, capital comes in that perspective. Okay, so when you say a formal definition of capital would be a stock of value that changes through acquisition, we just say that don't only focus on financial, focus on every category of capital. And please bear it in mind that not every such would be an organization which is not probably, let's say, required to go too much into the manufacturing side, because they're purely a service organization. So that's absolutely fine, right? So you start looking at in this perspective. By the way, while we talked about it several times on this fish perspective, it is not mandatory to use these names, although companies who are using the same names, it is not mandatory to use in this perspective. All right. Now, just to quickly summarize what we have done so far, that the need for IR is to improve the quality of information, provide a more cohesive and efficient approach, creates a larger set of accountability and stewardship. I mean, stewardship is all about wealth maximization, right? And of course, it creates a larger perspective for decision making by the users, not just the financial, but a larger perspective, right? These are principle based approach. It would normally be confined or normally be reflected towards entities which are profit oriented, but it does not really mean that not for profit organizations cannot use this, right? There's an identifiable communication. There are financial and non-financial items involved. Eventual objective is value creation. That's what you want to remember. Finally, my MN fish comes in picture in terms of the forms of capital. All right. Let's have a look at now the guiding principles of integrated reporting framework, or IR as we want to call it. Now, again, I think the larger perspective, and you would want to remember this. I want to discuss it here. Of course, we have slides to explain them a little more, but the idea is to build in a strategic focus and future orientation. How is the organization working towards or working in a direction so that has a very clear understanding of what it wants to achieve in future? Okay, I mean, we just took an example a while ago where we said that automobile companies are shifting towards shifting from making those vehicles which run on petrol or diesel towards electric vehicles. Why would they want to do that? Because they understand that sooner than later, right, the governments would start pressurizing that they need to have a cleaner set of vehicles. The governments would be giving subsidies, for example, to the users, or they would be creating the infrastructure and the setup which supports and facilitates the running of electrical vehicles, right? And that is where these businesses also need to be looking at moving their focus or drifting their focus from a short term to a long term perspective. All right. The second part talks about connectivity of information in the report, right? We'll see some example. I think we have an example on Tata Steel's integrated reporting framework where you would be able to build that. There is a business model reference in terms of what is the idea of the business, or and what way the business is expected to perform, right? That's something which everybody is expected to know. And on those model, or within that model, how are you bringing that, the MN fish perspective, right? How are you looking at the manufacturing, or the nature, or finance, or intellectual or social relationship and human capital perspective, and how are these related information from that perspective? And that is where the connectivity of information has a role to play. Okay. The third thing that comes is stakeholder relationship. You want to really share that perspective with the help of the integrated reporting framework, that it is not just the shareholders on a standalone, but it's a society at large. And when we say society, we intend to include the governments, we intend to include, of course, people like us who are a part of a society in itself. We talk about the customers, the employees, the suppliers, and a lot more framework in terms of how are those relationships being managed, right? It could be a lender, for example, it could be a banker. From that perspective, you start looking at all these parameters to be included in the discussion. Fourth point is about materiality. I think it's a straightforward one, where we say that you don't have to report anything which is immaterial, but something which is according to you, and that's where the flexibility parameter is important. As a business, if you believe something is material and has to be presented, becomes a part of your integrated reporting framework, right? Does not have to be too detailed, and that's where the word concise comes into the picture. Importantly, it has to be complete and reliable information, and also there has to be a consistency and comparability. You have to really bring the actual facts or actual information which is consistently presented, right? And it cannot be incomplete. You cannot just be expected to give one side of the view, which is probably favorable to you. You also need to explain in terms of what is the other impact of that. For example, if I say that, looking at carbon emissions, right? A lot of institutions, let's say we have this Delhi Metro Rail Corporation, or any such kind of, institutions which are, for example, being operated by the governments, for example, right? So they would be focusing or emphasizing on that they have earned a lot of carbon credits. There's a reduction in the carbon emissions, the way their processes are working, or the way they are trying to develop themselves, right? This also would have probably some kind of cost impacts. So you need to just not talk about the carbon emissions part of it, but you look at how is that objective of reducing the carbon emissions is being transitioned to. Does it have a cost or a time factor involved, right? You need to explain those parts as a part of the integrated reporting, and that's why it becomes a guiding principle of that. Okay, as we said before, every report must be built around the unique business model of the entity. And while there could be many examples, but you don't have any set format. I mean, using a set format for integrated reporting could be too much of a restriction for a business which is very different from another industry, for example. Okay. So as we said, just to kind of spend a little more time on what would be the relevance or meaning of these points: strategic focus and future orientation, provide insight into organization strategy, and how does it relate to the ability to create value. So always bear in mind, it's all about the value creation in the short, medium, and the long term, right? That's where it is. There is a sample. We would rather be seeing some actual numbers from Tata Steel's perspective. It says building natural achievements and social capital. There is a hypothetical company. ABC's vision of sustainable and inclusive growth has led to the adoption of a triple bottom line approach that simultaneously builds economic, social, and environment capital. So there could be investments including social forestry, sustainable agriculture, livestock development, women empowerment, education, etc. So that is where you start looking at how does, for example, their methodology of working has an impact on the social capital. Like, talk about the impact on rural India in this context. Many large organizations, right? We can name those. The Bharti Group, for example, Wipro Technologies, Tata as a group. I mean, these are all large organizations, big names who are using and explaining these aspects of where are they spending these money, how are they spending this money, and how does it create a value, under the integrated reporting frameworks perspective. Okay. Now, again, this is something which is the extension of the strategic focus and future orientation. Okay. Connectivity of information. I think this is where it is. You talk about an overall picture of dependencies of these factors, where you look at not just something sitting on the balance sheet, but also look at on a perspective of not just the financial capital, but the other aspects as well. Let's say, for example, a company may say, we aim to rank. So this is again about a airport company, where you talk about different sets of information in terms of how do you bring connectivities and how does it really operate from the functional perspective, etc. It's not exactly very critical to understand in detail, but more importantly, the messaging is that when you look at your business model, you try to bring along those aspects which are impacted on an overall basis, and that's where the dots are connected, as far as the different information is concerned. Okay. Reliability and completeness, likewise consistency and comparability. We have tried to talk about it earlier, so I don't want to spend a lot of time. It could be a little conceptual, but then don't go really too far on that part. Similarly, stakeholder relationships, you're talking about a larger group now, larger group of users of the financial statements. You're talking about the society in general, which was not probably expected or expected to be covered in your financial reporting perspective, but the integrated reporting expects you to talk about that part also, right? We just saw something on the rural India's perspective, where you talk about the women empowerment and education and vocational skills, etc., with one of the disclosures that we were referring to just a while ago. Okay. Now the final section which talks about is basically the content of integrated reporting. There is a entire list, but then that's not something which is the end model. And again, as we said, that the structure is more principle based. Okay. And you are allowed the way you want to prepare it. Okay, so the information is allowed to be presented the way you intend to do, but then the connectivity has to be built. The connectivity has to be built in this particular format, right? You have to establish that relationship between these different contents, right? And the contents probably you want to remember here is what is the organizational overview and the environment, the external environment within which it operates, right? What is the governance that it has to follow? We'll be using the word corporate governance as a part of it. Let's say in some countries, there are specific governance, corporate governance code, right? Again, they're not mandatory, but companies are required to explain if they're not following that corporate governance code. What is the business model of the company? The risks and opportunities, strategy and resource allocation, performance, outlook, and general reporting guidance is something which is a gist of the contents of IR. Now, importantly, the risks and opportunities or business model or the performance or even to some extent strategy and resource allocations are already covered under the financial reporting under the INDES framework. Okay, but then you're still talking about using that information. You're not saying that you present the same information there and exactly reflect the same information here as well. You're going to use that information and bring some perspective, like in this particular scenario. When we see some actual reporting, we should be able to kind of appreciate the need of this particular perspective, right? There was a brief meaning that we want to cover, which is talking about what is the organizational overview, what does it do, and what are the circumstances or the scenarios within which it's operating. Every industry would have its own set of, let's say, risks. So how do they operate within the environment, and what is, for example, the environment in which they are operating is something that needs to be discussed, right? The governance part, it's not just about the internal structure, but again to look at within the the external environment's perspective, what is the governance that they are following, and how do they ensure that, again, you would see it timing and coming, how are they able to create a value in the short, medium, and long term is something which is the requirement. Okay. Of course, the business model would be talking about the input, the processes, the activities, and the outputs or outcomes. That's what we expect to see in a business model as well. And finally, the risk and opportunities, which intend to impact these ability to create value, and how is the organization dealing with those. There would be a reference around it from India's perspective, as we were just discussing a while ago, but this is something which is more clearly required to be explained in this particular context. I think this is the slide which talks about the other parameters in terms of the allocation of resources, the performance part of it, right? And finally, the outlook. We will see something on these performances on those MN Fish perspective, on the different forms of capital perspective in terms of how to arrive at those. Okay. Basis and preparation, etc., is something which is more principle driven. There's no specific format that again you want to consider. Okay. Now this is somewhere which we want to probably understand it better, that in the Indian context, right? The SEBI, for example, had issued a circular on 6th of February 2017. It's already present, right? It issued order where it advised. It did not make it mandatory, right? All those top 500 listed companies to prepare these BRR, the Business Responsibility Report, and emphasizing upon the environment, governance, stakeholder relationship, etc., so that the users are able to get an overall holistic picture around that. Okay, I mean, the idea of even bringing it along is that the investor is not just looking at the financial information, but also the non-financial information, so that there is a clear communication. What is the value creation? Again, you would see this term again, which is being built by the organization over a period of time. The purpose is, of course, to allow and provide the users, which is actually relevant from them, not just from a short-term perspective, but also from a long-term strategic perspective. All right. What we want to do now, briefly spend some time looking at, for example, how is Tata Steel presenting its information under the integrated reporting framework, right? This is an extract of the financial statements where we see, you would recollect that there's a reference of a business model. The companies are required to disclose what is the business model they are following, within which you're talking about the inputs, you're talking about the processes, and then you're looking about the outputs and outcomes. And you would observe, so there is a financial capital, manufacturer capital, intellectual capital, human capital, natural capital, and then social and relationship capital as well. And they're all numbers around it. Financial capital is straightforward. They're talking about the net worth, for example. Manufacturer capital in terms of how many plants are they operating at, right? Intellectual capitals, you're talking about patents filed, research and development expenditure, collaborations or membership on terms of technical aspects. Human capital, number of employees on roles, investment made on employees training, number of employees trained in terms of the man days. So that becomes a more measurable criteria. That's where it starts coming in. And the natural capital would, for example, talk about what is your importation of raw materials, spending as far as the environment safety is concerned, talking about energy consumptions, etc. And finally, you look at social and relationship capital. This would be always interesting. Number of dealers, for example, pan India, number of distributors, customer facing processes, customer serving teams, CSR spend. So all these things are coming in terms of a quantifiable criteria. And that is where you see a bigger value of integrated reporting. It does not remain any more a theoretical concept. Okay. And when you look at, of course, the outputs or outcomes, you started looking at, if I were to take an example of, for example, in talking about human capital, you'd see the health index part, diversity, talking about employee productivity, for example, right? When you look at the natural capital's perspective, you're looking at the waste utilization, emissions intensity, raw material sites for biodiversity. You're looking at, for example, social and relationship capital. You're talking about safety aspects while selecting your, let's say, suppliers, right? You're looking at the training of the suppliers, management of the customers' complaints, truly loyal customers percentage. These are all benchmarks. And wouldn't you as a shareholder see these as considerable value? Eventually you see a return coming from these non-financial capitals as well. And that is where you start talking about the strategic perspective of integrated reporting, right? Similarly, when you look at these, you're talking about the financial parameters in form of revenues, EBITDA. You're talking about, for example, the capacity production in terms of manufacturing capital. We have seen this already, talking about the money spent on the researchers, the number of patents granted, etc. in the intellectual capital. It talks about the workforce of women, the diversity part, for example, under the human capital. You're looking at the utilization of waste and carbon emissions, etc., under the natural capital. And finally, looking at the spendings on CSR and different training initiatives for the suppliers under the social and relationship capital framework. Okay. Again, quickly, just to run through, we talk about again the business model where we refer to all these perspective is something being discussed here. Now, specifically, there is a reference of human capital in terms of how detailed are you looking at, so there was a macro number, there was a overall view, and then you're looking at, of course, a detailed explanation of how you have been able to achieve these occupational and safety governances, looking at use of technology, how to make people more efficient, etc. And again, you're looking at all those explanations in a fairly beautiful manner. You look at, of course, the use of charting. You look at the benchmarks or the calculations of, for example, the safety aspects. So you look at the number of instances or incidents within when there's a reduction in terms of the number of accidents at site, etc. So so the whole point is that when you look at this entire discussion, the objective of integrated reporting is to achieve something which is value creation. Of course, what we don't expect the examination to seek all these things in detail, but this could be really helping. This could be really suggesting some, inputs in terms of how that, how that theoretical framework looks like a very, very, very logical, practical perspective as far as the reporting is concerned. All right. So yeah, that's it from my side. Thank you very much. As far as this concept is concerned, we'll be of course discussing the questions from this particular topic in the next section. Thank you very much. So let's have a look at the questions which are from the question bank, and just to understand in terms of, although these are conceptual questions. So it says that state the categories defined in the IR framework for capitals. Comment whether an organization has to follow these categories rigidly. Now, importantly, it's very straightforward, direct question. We have that fish concept with us: manufacturing, natural, or nature as we want to call it, financial, intellectual, social, and relationship, and finally human. Right? Is it to be followed rigidly? The answer is again no. That's what you want to remember. You have a choice to use your own forms of capital, but normally companies would want to go with an easy workaround because these terminologies are available within the integrated reporting framework, right? So various categories or forms of capital are financial, manufactured, intellectual, human, social, and relationship, and natural. Organizations preparing an integrated reporting are not required to adopt the categorization. That is something which is a straightforward answer. Can a not-for-profit organization do the IR as per the framework? Yes, while primarily it is meant for commercial, private entities, or for-profit organization, a not-for-profit organization can also apply, this particular framework if they want to do that. Right? It can be applied and adapted as per the need. Right? This question says, can an IR be done in compliance to the requirement of the local laws to prepare a management commentary or other reports? The answer is yes. Again, it may be prepared in response to existing compliance requirements. The whole idea is that you don't want to, no duplication is sought. You don't want to duplicate your effort in preparing the same information at multiple places. The users of financial statements may not appreciate that. However, if in case there is a compliance requirement, you can simply use that also as a part of your reporting under the IR framework. So we will say that if an organization is required by the law to prepare a management commentary, and if that report is in lines with the framework, it's very much a part of integrated reporting. So the whole idea is to avoid that set of duplication in this particular context. Right? Finally, if the report is required to include specific information, then it would still be considered as integrated reporting if it does not obscure the concise information required by the framework. So what I'm trying to say is that while you have created this information in a different perspective, which is not necessarily an IR framework, could be a compliance need, but that's a more detailed one. Okay, so you can still call it as a part of, let's say, this particular framework till the time the concise information, the precise information has been presented to respect this particular framework in a simple manner. If it is too detailed, then the IR may require you to report it again separately in a concise manner. That is something which is the understanding or the need of this particular requirement in this particular case. All right. Thank you very much. Thank you very much.